When I saw that Olaplex was going public last September, I got pretty excited, as it's one of my favourite beauty products of all time. If you've ever bleached your hair and visited a salon, it's likely that your hairdresser recommended it. Alternatively, if you searched "help, how do I save my broken hair after going blonde?" Google would have likely pointed you towards countless blogs telling you the benefits of Olaplex. Now, over 6 months on from its public debut, we want to take a look at whether or not Olaplex is the real deal. Is it a worthwhile investment, or are they just putting the sham in shampoo? Let's find out. So let's talk about the history of Olaplex. Olaplex was founded by Dean Cristal, a man with family roots in the hair care business. His development of a bond-building formula that can help repair damaged hair follicles is what drove the company's amazing growth. In 2019, Cristal sold Olaplex to a private equity firm, Advent International, for an undisclosed sum. And in late September of 2021, Olaplex went public via IPO, raising close to a whopping $1.6 billion in capital. As of 2021, a mere 7 years after being founded, Olaplex was the #1 hair care brand on Amazon, the #1 hair care brand at Sephora, and had the largest follower count of any similar brand on Instagram. Not bad, right? Social media stardom. We couldn't talk about Olaplex without at least briefly mentioning its amazing social media presence. The brand has developed a cult following online and regularly trends on platforms such as TikTok and Instagram. With over 2.2 million Instagram followers and an army of beauty influencers all favoring its products.
Hey guys, today's video is sponsored by Olaplex. I love their shampoo and conditioner.
These have quickly formed part of its highly successful marketing strategy. Olaplex's financials. Let's run through some of the key figures from Olaplex's latest earnings call. Total annual revenue came in at $598 million, while US sales grew 131%, and international sales growth of 91%, and $186 million in cash and cash equivalents on hand by the end of 2021. And as for its margins, well, manufacturers typically don't have great margins. After all, you have to make every product you sell. Olaplex bucks this trend though, with gross margins of 79%. That's much more like a technology company than a hair care product. Because the company has a patent-protected portfolio of products, it is able to charge pretty steep prices. Of course, at some point these patents will run out, but for the time being, Olaplex has a strong moat that should allow it to maintain stellar gross margins and grow its market share. So, is Olaplex a good investment? No investment is without risk. For Olaplex, one of the biggest concerns is how fragile the reputation of a company built on the power of its brand can be. Recently, news spread on social media that one of the ingredients in its hair protector was toxic and linked with infertility. While these claims were largely overblown, brand damage from rumors like this can hurt a company regardless of what the science actually says. Our head analyst Rory also mentioned in his detailed write-up on Olaplex that he's worried it could end up being a one-trick pony. Consumers can be very fickle, and the company's current success could be tied to the novelty of the product. So what happens when the next thing comes along? Will consumers migrate to it like the same way they did to Olaplex? If you want to find out more, check out the link in the top of the description to Rory's in-depth analysis on Olaplex, where he discusses whether or not the company is truly a valuable investment or just another passing fad. For now, Olaplex is riding a wave of publicity through a particularly volatile market for new companies. Sitting quite a bit off its all-time highs at the end of 2021, this year will tell us a lot about how sustainable it will be as an investment. Can the company remain profitable and continue to deliver the kinds of products that consumers will break the bank for? Only time will tell. Until then, check out the free MyWallSt app to see what stocks we recommend that will help you get through the current market uncertainty. Full of investment tips, market commentary, and a short list of stocks that are likely to beat the market, sign up to MyWallSt now to make sure you don't miss out. And don't forget to like, subscribe, and click the bell button to make sure you don't miss out on all of MyWallSt's valuable investing content. Until next time, happy investing.